Welcome everyone to Vested Interest. This is Shane, and before we get into the video, I'd like to take a moment to thank everyone who's taken the time to watch, comment, and like the videos, and a special thank you to those who subscribe to the channel. I really do appreciate it. For those of you who may be stopping by for the first time, on this channel, we focus on dividend growth investing. It's not rocket science, in my opinion. The best way to do anything, keep it as simple as possible, so it really boils down to consistently investing, dollar cost averaging, whether that's weekly, bi-weekly, monthly, quarterly, once a year, whenever you get your taxes, whatever that time frame is, into growing companies with positive cash flow that covers the dividend and companies with a high return on their invested capital. I do a dollar cost average approach, investing in the portfolio every week. That's what this video is focused on. My portfolio updates every Sunday morning at 7:30. I did add $1,700 to the portfolio. It's free to see what I'm doing in my portfolio. There are no paid Patreons or paywalls you have to go to, or other sites that you have to log into and swipe your credit card, so to speak. I don't have any courses to sell you or anything like that. It's free to see what I'm doing every week. I'll be out in the open. I do options in the portfolio, all my buys, any of my sells, any reallocations in the portfolio every Sunday morning 7:30. Again, completely free. But if you would like to help out the channel, if you would take a moment to hit the thumbs up button down below. Make sure you subscribe to the channel. Hit that subscribe button. Join us on this journey to financial freedom. Join the Vested Interest community. Hit the notification bell so you're notified whenever we put out any new content. And drop a comment down below. Let me know what you are investing in. What have you been buying? What are you avoiding? Have you made any sales? A lot of companies their stocks have really run up. So I know some people are starting to book some profits, thinking maybe the market's overdue for a pullback. Let me know if you are doing that. What are you selling? Are you trimming some positions? Are you selling out of any completely? Would really love to hear from you in the comment section down below. And thank you to those out there who have done that. Really appreciate the subscribers out there, and doing all that really does help out a small YouTube channel like me. So again, thank you so much. And with that out of the way, let's jump into the meat and potatoes of the video here. We will start out on Monday, May 13th. We did get a covered call here. We threw out a few of them, but this is the one that happened to hit. We did jump back into a covered call for BABA. So to do a covered call, you have to have 100 shares. That's what this -1 represents. It's one contract. It's a covered call. That means we own the 100 shares, sold to open with a $94 strike price. Expiration expires on May 17th. So if it's $94 or above, then those 100 shares would be called away at the $94 strike price. And for that, we got 47 cents per share. So minus some fees, $46.45 in options premium. The covered call did expire worthless. We kept those shares, and we kept the options premium, right? So we will probably look to run this covered call again. We did throw out one for Johnson & Johnson. I think we were a little too conservative there. And we are being pretty conservative here. As you can see, $94, that's pretty far out of the money, but that's part of the reason I think I could have done one for 90, and I looked at the one at 90. I think it was for like 78, which would have, yes, been a little bit more option premium, but the stock and I would have expired worthless because the stock only went up to 88. But I thought there was an opportunity that BABA could actually hit the 90s. I think they may hit the 90s next week. I think they're on a little bit of a run. Before I put this into my dividend portfolio, I actually was buying and selling this in my Webull account, and I would buy 40, 60 shares in the 60s, 70s, 80s, and then I would let it run up to 100 to 110, and I would sell it, and then I would keep doing that. And it was one of the ways I was using some of those funds to throw into the dividend growth investing account. And I'm talking a couple $1,000s. I wasn't spending a bunch of money over there, and I still have several $1,000s on my Webull account, right? I put a couple $100s there every week as well, just to play with some stocks, and it is a way I generate extra income, just like the options here. So I think BABA could potentially get back up into the 100, 110s here in the next couple quarters if China really turns around. Excuse me. But anyways, that's a different story. Here's the options for this week, $46.45. Now, we did get some dividends on the 14th. Enterprise Product Partners paid us $119.53, and we do have the DRIP sets. That's dividend reinvestment plan. That just means that anytime a company, in this case Enterprise Product Partners, pays out dividends, those dividends go back in and buy more shares of that same company. So those that $119.53 picked up 4.1606 more shares. Those 4 shares added an additional $8.57 in passive income over the next calendar year. Now, we weren't done. We got a lot of dividends on May 15th, right? Omega Healthcare Investors paid us dividends. We got $189.73 there. Those funds went back up and picked up 6.16235 shares. That's ticker OHI. This is out of a REIT out of the healthcare sector. And if I didn't mention Enterprise Product Partners, they're the first one that paid dividends. They were out of the energy sector, the oil company, ticker EPD. Ally Bank paid us $70.64. Those funds went right back in and picked up 1.71879 more shares. That's ticker ALLY. That's a bank out of the financial sector. Realty Income paid us $61.12. Those funds, dividends, paid us or picked up 1.10895 more shares of Realty Income, ticker O, a monthly paying REIT here. Procter & Gamble paid us $34.13. This is one that I really want to start adding to, actually. I hope they pull back a little bit. I'd like to add more to Procter & Gamble. The $34.13 picked up 0.20545 more shares of ticker PG. This $355.62 added an additional $22.80 in passive income. And we finally get to the first additions in new capital here. We added $1,342.93 on May 13th. That was Monday as well. So a lot of activity on Monday. We bought some shares. We had some dividends paid out. We also had, excuse me, we also made some purchases and had the options play hit. So with the $1,342.93, we picked up 10 more shares of Comcast Corporation, ticker CMCSA. That is out of the communication sector, and we picked up those shares at $39.41. 5 more shares of Starbucks, ticker SBUX, out of consumer discretionary sector. We picked up those shares at $76.15. And this one we're going to continue to add to. We'll probably add to it up to maybe $85, $86 per share and back off. It's another one that it dropped down to like 72, 73. It has rebounded a little bit here this past week. I think it's back up to 76, 77 by the end of the week. This is another one, CVS Health Corporation, ticker CVS, out of the healthcare sector, has really dropped back. So we're going to build this one out a little bit. We added 10 more shares there at $56.81. The $1,342.93 and the new shares added to the portfolio added an additional $59.40. And part of that is CVS with its big pullback. It's like a 4.6% dividend yield right now. Starbucks is a pretty nice dividend yield, and Comcast is in the mid 3%. So these were all high yielders right now. So it added a nice chunk of passive income here. And we weren't done. We added another $357.35 on May 17th, Friday here, and we did our weekly buys, right? We added the 1 share of Vanguard Total Stock Market ETF, ticker VTI, $261.93. We're going to buy that every time. I wish it was back down in the $240 range, but the market has really rebounded, so that is what it is. And we're going to add, doesn't matter what it is, at least 1 share every Friday. SCHD, same thing. It's really rebounded. We're still getting it under the 80s, so that was nice. It did peak over the 80s this week, so next week I'm hoping I can still get it down in the 70s. It'd be nice to get it back down in the $74, $76 range. I mean, last year I was getting it in the 60s, 66 to 68 range for my daughter, so it'd be nice for it to be back there. But it is what it is. It is growing, right? That's what it's supposed to do, not only dividend growth, but also some capital appreciation. So ticker SCHD, this is the Schwab dividend growth ETF here. Added 1 more share at $79.95. And we had a little bit of funds left, so we added 3 shares. And MPW in the beginning of the week jumped up by like 15%, but then by the end of the week, I think it had given a lot of that gains back, but was still over $5 per share. So we added 3 more shares of ticker MPW. This is a REIT out of the real estate sector at $5.16 per share. These new shares here, this $357.35, added an additional $8.76 in passive income. Total invested, $1,700.28. Total passive income added, $99.53. Not quite over 100, but over the last 3 weeks, we've put well over $300 in passive income. And if these months keep stacking up the way they are, it won't be long before we are over $1,000 a month here in dividends. Quick run through the overall portfolio by the sector weights here. Communications makes up 9.7% of the portfolio. Consumer discretionary sitting at 6.11. Consumer staples at 9.96. Energy makes up 5.86. I would like to continue to add to the EPD, Enterprise Product Partners. I might be adding a little bit there, as well as Enbridge. Enbridge, I think, backed down a little bit below my cost basis, so I'd like to add a little bit more there and build out the energy sector just a little bit. Financials makes up 6.14%. Healthcare sitting at 13.92. So long as CVS remains down the way it is, I'll probably add there. I wouldn't mind adding a little bit more to Pfizer. And if Johnson & Johnson drops back into the 140s, I'll look to add there as well. Industrials makes up 6.79%. Technology sitting at 6.76%. Materials makes up 11.02%. Utilities 10.21%. REITs and real estate sitting at 10.84%. And ETFs still the smallest sliver here at 2.7%. Over here on the right, you can see the portfolio sector weights broken down by the percentages here, and then also how much funds I have allocated to each sector as well. Then the total here at the bottom. And here it is. I show it every week, every Sunday morning at 7:30 a.m. or right about around there. Sometimes they don't post right at 7:30, but right around there, that's when I set them to post, and then it's up to YouTube to do the rest. I show my portfolio, what I've bought, what I've added to it, any dividends paid out, any options. That is exactly what we just ran through. I update the numbers here in the total shares and the current price as of the close of business, so you can see here all the tickers, total shares of each position I own, current price, again, as of the close of business on Friday, the market value, where it sits as of the close of business on Friday, my average cost per share, how much in funds I have in each position. So in the previous slide you saw by sector weights, this is by each position. Total return, whether I'm up, I'm going to show you. I want people out there to see a real portfolio built out over time, the ups and the downs, the green and the red, even within the portfolio. You know, some positions are going to be up, some positions are going to be down. The market goes up and down. There's different sectors in the market. They go up and down at different times depending on where we are at in the cycle, in the economic cycle. So you can kind of see that, right? Whenever you look through the portfolio, communication sector might be down at times. Right now, Verizon, Comcast, and AT&T is up a little bit, but Verizon's below my cost basis. Comcast is down a little bit. So you can see how that sector is down a little bit, right? Healthcare right now is down a little bit. CVS is down. Johnson & Johnson is down. Where's another one? Pfizer is down, so the healthcare sector is down right now. So you can kind of see it's not just individual stocks. Sometimes it's entire sectors that are down. So that's why I want you to be able to see. And whenever the red in the portfolio, in my opinion, are the buying opportunities. When those sectors and those stocks pull back, if they're good companies, if you've done your research, that's where you should be buying. And that's why I want to show you this portfolio every Sunday, so you can see that's part of the market. If you're going to get freaked out whenever you see some red, just stick to ETFs or index funds and buy every week, regardless of what the market is, up or down. But I like to pick individual stocks, so I want you to see it's the same way with individual stocks. You're going to have some up, some down, and that's what I want to show. So enough of that. Percent return here in this column, the sector that each one falls in, whether they're a quarterly, monthly, semi-annual dividend payer. I need to spread those out a little bit. Current dividend yield as of the close of business on Friday. My yield on cost here, the portfolio weighting. So on the previous slide, we saw the sector weightings. Here we'll see the portfolio weighting. Estimated annual income right here, payout months, dividend growth, and where they sit at 15% of their 52-week low. Let's talk through this one real quick. I try to hit it every week because I want people to really understand it. So BABA, for example, it's a good one to show right now. My cost basis is $75.44. I want my cost basis to be under $76.62. Currently, the current price is over the $76.62, and probably if I was to add here, it would drive my average cost per share. So that one I am done adding because I'm so close to where I want to be at 15% of my 52-week low. If this was still below my cost basis or below $76.62, I could potentially add there. But right now, BABA, I'm going to be done. Comcast here is just the opposite. My cost basis is $41.88. I can buy it up to $41.84. So since that's a little below my cost basis, I want to continue to add here and bring this back underneath where it sits at 15% of its 52-week low. That's my objection, or that's my objective right here. My objection is that I'm slightly over where it sits at 15% of its 52-week low. So that's what I use that column for. It's like my high mark of where I want my average share cost to be. So total shares, I have 6,636.825 shares. Market value of the portfolio is $257,634.60. I have contributed $242,201.59. I am up $15,433. I don't focus on this. I'm up 6.37%. I don't focus on this. The current dividend yield is 4.238%. My yield on cost is 4.509%. And that's why it's circled in red. This is what I focus on. The dividends paid out by all the positions in the portfolio, the annual income that the portfolio generates, sitting at $10,919.70. Continues to go up week after week as I add new capital, as positions in the portfolio, like we saw this week, pay out dividends, as those dividends buy more shares of the companies that paid the dividends. And this highlighted in yellow, these are the companies that have already increased their dividends for the year, and that's another way that dividend snowball grows over time. And as you can see, we're getting very close to going over 11,000. I would not be surprised at all if we bust over 11,000 next week. And then it's on to 12,000, which that's the real next milestone for the portfolio. 12,000 would mean $1,000 a month in dividends. So that is kind of my next milestone. And then from 12,000, I'm looking at getting to 24,000, which would be $2,000 a month in dividends. So really like the growth of the portfolio. It's looking very good. It is very exciting. And seeing that week over week, month over month really does keep me encouraged to continue doing what I'm doing, because I'm seeing the fruits of my labor, the benefits. I'm actually seeing it work out in real time as time passes. I know it's slow going, but I mean, who of us out there can't use another $1,000 a month? I know I can. Dividend growth is 5.86% year over year. And that is the portfolio update. Let me know what you think down in the comment section below. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community. Drop a comment down below. Again, let me know what you think. What are you investing in? Are you taking any profits? Would really be interested to hear anyone out there that may be taking profits. And if you are taking profits, what are you rolling those funds into? Because I'm seriously considering maybe taking some profits in a couple positions that are lower dividend yielders, and maybe buying some positions like CVS has really dropped back and is really showing a nice dividend yield right now, and I could really juice the portfolio. So I'm considering that, especially for some other ones that are underperformers in my opinion. I know I'm going to probably give them a little bit more time, like Kraft Heinz, but it is one I'm watching as well. So I would be interested to know, for those of you out there who may be trimming some positions and taking some profits, what are you going to roll those profits into? I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. I do my stock pick of the day series as well. So if you have a company you'd like me to do in that series, do a video in that series, go ahead and drop it down below as well. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes with those who take a vested interest. Hey, thanks for stopping by. Hope you have a great weekend, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing journey for educational and entertainment purposes. Investing involves risk and can money to never invest any amount of comfortable losing. Always do your own research, invest based on your situation, circumstances, and select criteria, or seek the advice counsel certified financial advisor.